Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 29th of September. Starting off with the FTSE 100 where we breathed a sigh of relief, had a bounce off or just below that 50-day line. That was basically the bottom of the rising wedge that we had there from August. So there's a respite for the bulls, and at least while we're above that 50-day line, 75.30, looking for another attempt on that February resistance line up to 77.50, and then maybe even a bit higher to that August resistance line projection, 78.30. But the key here really is staying above that August uptrend line on an end-of-day close basis. RSI bounced above neutral 50, which is normally a good continuation signal. Didn't actually work, I suppose, back at the beginning of September, and so let's see if we can get a nice kick into the beginning of October. Onto the DAX, where the charting worked in terms of this market hitting that line of support there, rather obscure line of support there from back in May, 15,100. You normally actually expect with that extended top that we've got there on the chart for just this market just to roll over and go back to 14,500, which was the March support, but obviously that could still happen. The first thing for this market to do is get back above the 200-day moving average, 15,600, and then up to the 50-day line, 15,800. The gap higher today is a good look, obviously, and would hope that we stay above the floor of the gap, yesterday's resistance around 15,300. Moving along to the Dow, the picture here, a better one too, in the sense that we clung back to the area of the 200-day line, 33,800, looking for an end-of-day close above that level, bounce of the RSI off the oversold 30 area, so hopefully we could end this week above the 200-day line and then head back to the area of the 50-day moving average, 34,700 early in October. If we do break down below this week's support, then we've got the old May support area, 32,600, but hopefully it won't come to that. Onto Bitcoin, which is, as I've said many times, died a death really in terms of the price action. You'll see that at least we are actually at or above the support line there from January. We're looking to break that July resistance line or around the 27,400 area. Good news, I suppose, to end the week is that we are above the 50-day moving average, 26,600, so that does make it seem more likely we can break through the recent range up through the 28,000 basically and head up to 30,000 sometime during October. Only back below 26,000 implies a retest of the post-June support around 24,900. Want to look at the state of crude oil at the moment, which is looking quite perky, and obviously that might even affect or help some of the small cap stocks, one of which I will be looking at. The situation here is that we're fast approaching our initial target here up to $95, and if you're a fan of crude and you're looking for a big win, it could be up to $108 maybe by the end of next month or going to November if we clear 95 quickly over the next few sessions. But price action here pretty good as well, in the sense that we had the old resistance around $85 and new support has come in towards $88, so that's a nice touch there as well. Moving along to the situation at the AIM market, I just thought I'd have a look at that as well. FTSE AIM all share, and here you can see it's not exactly been a year to remember. We've come down quite a long way, but the other thing to note is that all the attempts to kill the market seem to have been working in terms of liquidity, market cap, this, that, and everything else, and all the rules. We're back really where we were in the middle of the last decade, so around the 700 level. So what a indictment of the small cap area at the moment. On to the stocks, and starting off with a prettier picture than AIM, I suppose. We've got Caspian Sunrise. Here you can see that the market has bounced back through the 50-day moving average, and that's now starting to curl up, which is what we like. We've broken through neckline resistance around the 3.3 pence level and above 3.3. Looking for this market to head up to the area of the 200-day moving average near 5p by the end of next month. Chill is interesting at the moment. Just if you look at the candles on the daily chart, you can see that we've actually had, this is like the 8th up day we've had, 8th positive candle, which you don't see very often, quite amazing really, and it's been in an orderly fashion, which shows that there's been sort of people chipping away at it, which is nice. Said previously above 5p we're looking for 8p, and that is what we're looking for hopefully during October. maybe later in the year we'll get up to the old June resistance just shy of 10 pence. But the key is staying above the 50 and 200-day lines and maintaining that 8 in a row positive type of flow. Moving on to Hemogenics, which has had a bit of a choppy ride over the last week or two. Here we gapped up earlier in the month on the 15th, and we come back to try and fill that gap, which is interesting. But we bounced above the 200-day line and the floor of the gap at 1.9p, which is a positive. The old prediction here was that we'd head up to 2.6 pence, which we did. Above 2.6, which we're looking for again, looking for the shares to fill the gap up to 3 pence. So that's the key. We can get another 0.6 pence on the upside. We will be happy, especially after the latest RSI 50 rebound. The other point to note, actually, which I've just noticed, is that the 50 and 200-day lines are both rising, so the next time they cross, they should be in a golden cross, and the run-up to a golden cross tends to be the strongest part of the cycle. Requested stock next, which is one I was actually going to cover anyway, Hydrogen Utopia. Here you can see that looks like there's a bit of a squeeze starting here. We've got this sideways maneuver around the 50-day line, around 5 pence, above 5 pence. We're looking for quite a swift move towards 10 pence, maybe by the end of next month, on the basis that we put in higher lows, and also that the shares seem to be squeezing higher, or being squeezed higher. We've seen how well crude oil is doing at the moment, and that should obviously filter through to companies like i3 Energy, which has actually already been recovering after the fall for the shares back in June. So decent base there, neckline resistance around 14 pence. Good consolidation for most of this month against a rising 50-day moving average, which tends to be the precursor of a move to the upside. Initial target here was up to 16 or maybe even 17 pence, because that was the old support back in March through 17 pence, and the 200-day line looking for up to 21 pence. And that could happen as soon as the end of next month. Moving along to Plexus, one of my favorites, so obviously because it's just gone up vertically over the last month. Not quite vertically, we bounced off old resistance yesterday, and so that is actually quite a strong sign that we can head up and retest the 30 pence zone, and I think that was our final target over the near term, like 31 pence, hopefully, while we're above the 20 pence area. Onto a stock which has been very keen to raise money for the market over the course of the year, and the share is actually doing rather well given how many fundraise opportunities the company's taken. Nice uptrend line there, basically a neckline there from back in June on Predator. That's running through 11 pence. If we can break the 50-day line at 12.5, then I think we could actually head back up to 18 pence quite quickly, hopefully by the end of next month. It's good that the shares have been able to consolidate above the 200-day line since June, even with all those fundraisers. So it looks very strong indeed, actually, at the backbone of the price action there. Let's see if that doesn't curse it. Onto Pelatro, and here, as we remember the oil chart, maybe this is one of those situations that might be turning around too. We've got the shares breaking recent neckline resistance around 0.8, above 0.8. We're looking for the top of that falling trend channel from back in July at 1.75 to be hit as soon as the end of next month. We've also got bullish divergence there as well, but it's nice to have that 0.8 neckline as a potential support, and looking for towards 1 3/4 pence as a target. Stock which I don't think anybody looks at really, but the shares have done well. Supreme, here we had a bear trap gap reversal. Shares then rested at the top of the gap, and also on the 200-day line rather, at 106. And we were looking for the shares above the 200-day line to get up to £1.35 or 36. Hopefully we will do that by the end of next month, and the way things are going, hopefully by the end of, maybe the end of next week, actually, the way things are going. If you're a fan of the shares, maybe looking for a higher target, that resistance line there from the end of May up to 150 could be the target to go for by the end of next month. On to Tern, which I know the bears always like throwing mud at, and here you can see that situation looking quite perky actually. We've had rising 50-day lines since the end of August. Shares have consolidated either side of that, which tends to happen before a move to the upside. Sort of U-shaped turnaround there as well. All that's missing now really is breaking that 200-day line around 5.8 pence, and then hopefully heading up to 8 1/4 or 8.3 pence by the end of next month at the top of that rising trend channel from March. Moving on to the last two, and exciting moves in Vast yesterday, and here what's interesting is that On the way down, the shares gapped down twice in earlier this month, so it's looked as though there's sort of end of bear market moves there, or end of bear moves. End of the line bear moves, maybe. Two unfull gaps to the downside, and then we've had the big move higher. What'll be nice today is, after yesterday's gap close buy signal at 0.25, is that we stay above 0.25 and then close above the 50-day moving average at 0.28. Above that 50-day line, looking for 0.45, and the top of that broadening triangle from July, as well as the 200-day moving average, which is actually rising. So maybe we have effectively a bear trap gap reversal on that stock. Finishing off with Zenegger, and here stock doing a bit of a predator there, crawling along a rising trend line. Want to see an end of day close above the 50-day line at 5.4 pence. If we can get that, then it could be back up to 8 or 8.8 or even 9 pence by the end of next month, providing we obviously make no new lows below 4.4 pence. That's it from me today. More updates over the weekend.